In the weekly outlook, we talk about the markets delivering. And this weekend, we kind of, we were happy. I was happy when I was making the analysis itself about the possibility of the markets crashing. Because FOMC consolidated the markets last week, right? Let's do Nasdaq. Nasdaq is a little bit more visible. The markets consolidate throughout FOMC right here. NFP run the liquidity through into that inversion, which pushed the market lower. Brilliant. But we have to realize that this is where we did the analysis. Sell side was taken. I was expecting lower prices, but I wanted to see some healthy price delivery first. Meaning I wanted to see something healthy in the market delivering, which is a little bit of retracement. Retracement didn't happen and all the targets are thin. So every single week we start with bonds, right? The bonds is something that I work with constantly in terms of viewing it as a market driver. Because the bonds are correlated directly with interest rates, and when you consider what is an interest rate, is the main driver of the market, because that's how the money moves. High interest rates, money is flowing in because people do want to invest, they want to buy, they want to move their money. Low interest rates, nothing, because there's no intention on moving the money, but there's an intention on borrowing. This is exactly what we do when we buy in, when we sell out. So very simply, I was looking at 1.125.3 to be delivered. I got that immediate, like I can't say that enough, but this was not expected immediately. Wanted to see a little bit of retracement before we go higher. Dollar index. I am calling for the market to go lower, and we're getting that, but it's gonna be very interesting to see where we close today. If we close below this weekly imbalance, I think the market just continuously gonna crash towards this weekly fair value gap itself. But weird way to say, I want to see the market delivering healthy. So I wanted to see this being treated as an inversion, but we just continuously ran through sell stops and the liquidity lower. So I wanted to see this. We didn't get it, but my eyesight goes towards this. This is not hit yet, but we're targeting this. 102.075, that would be amazing. Liquidity already taken, woohoo! Euro USD. So if you had time, so the markets opened like 15 hours ago for forex trade or CFDs. You had time to buy into this. 900 pips. This is fucking insane. 900 tips. Like, you can't imagine how that is in reality. But Euro USD delivered. GBP USD itself, I very much said that this is a 50-50. The name even says it. Pound 50-50 here. What do we see? We see a market struggling to deliver. The market is in a literal consolidation right now. What I'm expecting this to happen. But right now the market is range bound. So we're not touching it up until the point that the manipulation appears. Where can we see the manipulation appearing is if the market runs lower and then distributes, or the market can run higher and distribute after. We're only interested in the distribution itself. Right now, this is still 50-50. Yes, guess what did we call for? 52? Selling random. Guess what did we call for? Nasdaq to deliver 181211.5 random. You can achieve that only if you trust the fact that the algorithm. When you know that, when you realize that fact, this is what you can achieve. You can literally call the market precisely, just like we do. Just trust the algo, believe in the algo. Knowing that though, where does it bring us? Because a lot of markets that we call or has delivered, the only market didn't deliver yet is the GBP USD that we're gonna look to trade this week. Because we're gonna wait for manipulation to run away liquidity, and we're gonna try to participate on the distribution stage. But here this is becoming very difficult because we don't know what is gonna happen. On paper, I'm gonna wait for this to either hold in the price for today or get inverted. If it gets inverted, 7338.75, that's my immediate entry.